trying to make sure that we keep supporting the businesses out there. I wanted to first introduce myself, and my colleagues, as well as our presenter. My name's Hugo Garcia. I'm the Economic Development Manager for Local Services, which focuses on the unincorporated areas of King County. With me is my colleague. I'll let her introduce herself. She's here.
Thanks, Hugo. Hi, my name is Shannon Harris. I'm one of the co-leads of the King County Small Business Task Force that was put in place to respond to the COVID-19 pandemic.
Great. And then we do have with us a presenter from the Department of Revenue. Today's presenter is Quinn, and Quinn is here joining us. Oops, sorry, I had the wrong. She's been with the Department of Revenue with the state for more than 19 years experience working with state taxes. She spent her first 15 years with the department as an auditor. And in that role, she worked with a variety of businesses to verify accuracy of their excise tax returns. Now, as the agency's education coordinator, she helps taxpayers find the answers they need to report correctly every time. And we know that this year is one of the most challenging years on having to be up to date on information with all the different grant programs and SBA loan products and deferments done. So it's going to be really critical, especially as the year comes to an end and we prepare for next year and the year reporting to be informed. So we really appreciate Quinn's time, and thank you so much for being able to share with our small businesses from King County. And with that, Quinn, you should be able to unmute yourself.
Oh, well, hello. I think that Shannon had some screens she was going to go through.
Yes, I'm going to do a little bit of a public health share. So thank you, Hugo. I'm just going to do a quick public health update. I'm sure everyone has heard that our case numbers are increasing very rapidly in King County. I'm sharing some of the data from King County's public health dashboards, where you can see on a daily basis what our current situation is. So as you can see from the graph in orange at the top, starting in November, early November, late October, we started to see exponential growth in cases. So because of that, Washington State has put in new restrictions until December 14th that limits any social gatherings. You're required to not participate in social gatherings outside of your household unless you are outdoors. If you are outdoors, you can gather with no more than 5 people from outside your home. The new guidance has changed which businesses are operating or the scope of their operations. So if you look at the next slide, you'll see that there are many essential businesses. Essential businesses are still operating, but some businesses have needed to reduce their capacity. Retail is to be operating at no more than 25% occupancy. Similarly, professional services also at 25% occupancy. So when I send out the slides for today, I will include some links so you can just double check the current guidelines and make sure that you're putting your business into the right mode of operations for the state that we're in right now with our COVID cases. I also want to highlight that our essential workers are seeing high rates of COVID-19. And so if you have a workforce, or if you within your community know of any essential workers who are working, please do encourage them to take any precautions. If they need to quarantine or isolate because they have symptoms, encourage them to do so. If your business employs essential workers, please take all safety precautions possible, which means having employees stay home if they have any symptoms or if they have a known exposure. Also, make sure that your workplace is maintaining all of the current health and safety guidelines, including employee screening for symptoms, washing hands, and keeping employees and customers spaced appropriately and at the appropriate occupancy for your business. So we are taking this uptick in cases very seriously, and we would greatly appreciate your cooperation in helping us drive down cases again. Our goal is to have 25 cases per 100,000 people, I believe. So we have a long way to go, but if we all work together, we can definitely drive down our numbers. So thank you. And with that, I will turn Hugo, is there anything that you want to add?
Yeah, I want to just mention a couple housekeeping things, I guess, to make it easier for folks to ask their questions. You should be able to see a Q&A button at the bottom of your screen where you can write in a question. Separately, we have some comments related to the presentation that Quinn will be going over. You can also input into the chat, but please do submit your questions within the Q&A feature. It helps it so that a question doesn't get lost within any chat conversations that end up going through the presentation. In the chat, I'll also include my email so that if folks, if there's some questions that we can't answer in the amount of time we have today, we can circle back. Email me a question if it wasn't answered, and we'll try to get connected with Quinn afterwards as well to find out if we can get some more information. And with that, we will hand this over to Quinn. Thank you so much.
All right. Thank you, Shannon and Hugo, for a lovely introduction. And I'm going to work on sharing my screen here. So we'll just go ahead and jump in. And I do welcome your questions. Like Hugo said, please send them in via the Q&A feature, and we will answer as many as we can. And I am happy to answer any that we don't get to afterwards. So we'll just go ahead and get started. So that's me. I thought it would be helpful to have a face to go with my name. But as Hugo mentioned, I've worked for the department for 19 years, and I am now as the education coordinator for the agency, working to help folks demystify taxes. So let's go ahead and get started. Today, we will talk about excise taxes in general, and then dig into some specific classifications that are likely to apply to your business. I will briefly explain how and when to report and pay those taxes on your excise tax returns. And we will discuss personal property tax and unclaimed property. Those are two items that a lot of folks just don't hear about. And so I want to share that information with you. And we will also talk about some resources available to help you report your income correctly. So my goal for the presentation is, again, to provide basic information about excise taxes so you know what to report and when. And we will be talking about some different resources. And like I said, I'm happy to answer your questions, and we'll be compiling those and answer them at the end of the presentation. So just to make it clear, the Department of Revenue is the state agency that collects business taxes. The taxes that are collected are used to fund state government services, such as parks, state parks, public services, and education. We are not the IRS, who collects federal income taxes from businesses and individuals. These federal income taxes are used to fund federal public services, including the military and national parks. So there is a difference, which I'm sure you're all aware of, but I'd just like to make sure we're all starting from the same page. So as taxpayers, by law, you have certain rights and responsibilities. Our website has a complete list of your rights and responsibilities, but I want to highlight a few of each here. You have a right to written explanations of tax assessments, interest, and penalties when they are issued. You have a right to clear and current tax instructions and information, and an expectation that you can rely on the written advice and reporting instructions provided by the department. You have a right to have the confidentiality of your financial and business information maintained, and I will tell you we take that very seriously. You are responsible to know and stay updated on your reporting obligations. So you are in the right place. You're responsible to keep accurate and complete business records. And you are responsible to file your returns and pay your taxes on time. So I want to illustrate what these rights and responsibilities look like. What does this really mean? Your right to clear and current tax information and your responsibility to know your tax reporting obligations go hand in hand. The department works hard to keep our website updated. That's one of my projects for a lot of the website content is something I oversee. And so we work to provide specific updates to affected taxpayers. How you report and how your account is set up will determine what information you receive from us. For instance, information is often sent based on an industry code, so how we have you categorized in our system, the tax classifications you report, the deductions you might claim, or the locations you report for retail sales tax. However, as much as we have all that information, our system for alerting you to new tax law changes is not perfect. So you are still expected to make sure you have the most current information. You can do so by checking our website regularly and subscribing to email notifications. In fact, we just recently changed our email delivery service, so it is new. If you were on our service before, you got switched over, but there are some other features available to it, and you can find out more on our website. All right. To begin, I want to talk about the 4 main excise tax types in general. I'm going to discuss these tax types broadly here, and we will talk more specifically about each of them later in the presentation. Please note that for the remainder of the presentation, I will refer to business and occupation tax as B&O tax. B&O tax is a tax on the act of engaging in business. There are more than 50 tax classifications for B&O tax with varying rates. And the classification you report under is based on the business activity you perform. And you might report under more than one, depending on what your activities are. Today, I will discuss retailing, wholesaling, manufacturing, and service and other activities B&O tax classifications. So the B&O tax is a pyramiding tax, meaning that every transaction is subject to tax. One item can be subject to B&O tax multiple times at each stage in the process, say from manufacturing to the sale to the end consumer. So let's look at a 2x4 piece of wood as an example. When the tree is cut down, there's a B&O tax on that. It's called extracting. We're not going to talk about that today, but that's what it is. When the tree goes to the sawmill to be manufactured into lumber, there's manufacturing B&O tax due. When the 2x4 is sold to the lumber yard, there's wholesaling B&O tax due. And then when the 2x4 is sold to me at the lumber yard, since I'm the customer, the retailing B&O tax is due. And so this same 2x4, the same piece of wood, has been subject to B&O tax 4 times. But luckily, the those tax rates are pretty low. So let's switch gears then to talk about public utility tax real quickly. It's a tax on public service businesses. There are several public utility tax classifications with different tax rates, and the classification you report is based on the public service you provide. Today, I will talk about motor and urban transportation public utility taxes. Unlike B&O tax, public utility tax is not pyramiding. It is due on income from public services only once. If 2 entities provide a public service together, they each pay tax on only their portion of the gross receipts from providing the public service business. For instance, let's say that City G pays PUD 1 to distribute water to some of City G's residents. City G collects all of the income for water service for all of its residents and reports that amount on the excise tax return. But they take a deduction for the amount they pay to PUD 1. So they only report their tax, they only pay tax on the amount that they keep. And then PUD 1 reports tax on the amount they receive from City G. So the total income for providing water service to City G's residents is taxed only one time. We will also talk about retail sales tax, which should be familiar to all of us because I'm sure we all pay it when we purchase things. And then use tax, which is its friend, its companion. Retail sales tax is due on most retail sales and must be collected by the seller and submitted with the excise tax return. Whenever you purchase items to use rather than resell, then you must pay retail sales tax to your vendor. Or if your vendor does not charge you sales tax, you report use tax on your excise tax return. There are some exceptions, and we will talk about a few of those later in the presentation. Last but not least, I will provide a very high-level overview of personal property tax. This tax is paid by businesses on the value of assets used in the business. It does not apply to inventory held for sale. Throughout the presentation, I will refer to some records or documents you will need to keep in the event you are ever audited by the Department of Revenue. You are expected to keep copies of your business records for 5 years. The records you need to keep include anything you use to file your excise tax returns, especially your income records, documentation required for deductions, and purchase invoices. These records can be kept electronically, including scanned copies of documents, and I will just put a plug in here for scanning any receipts that are printed on thermal paper. That ink fades over time, so you might have a beautiful purchase invoice or purchase receipt from a store that shows that you paid sales tax, and 4 years later when you get audited, none of those, all that ink has faded, and we don't know what you bought, and we can't tell that you paid sales tax either. So please do either take a photocopy or scan those receipts. Makes everybody's life easier in the event you're audited. So, all right. As we discussed previously, state of Washington does not have an income tax. We have a B&O tax instead. And the B&O tax is a tax paid by the business. And as I mentioned before, it is a transaction-based tax, and the classification that you report is determined by the type of business you conduct or the activity you perform. B&O tax is due on your gross sales income less some available deductions that we will discuss later. Like I said, there are more than 50 classifications, and no deduction, while there are some deductions allowed, deductions are not allowed for some of the things you're used to on income taxes like labor, materials, or taxes. As I mentioned before, the taxes you report to the Department of Revenue are different from the taxes you report to the IRS. And in Washington, businesses report based on gross income rather than net income. And I do want to make sure that I make this clear that the gross selling price is before sales tax. So if you are collecting sales tax, please don't include that in the amount you report on your excise tax return. The math with the excise tax return figures out that sales tax that you need to pay. So I want to make sure that's clear. The amount you report on your excise tax return is the gross amount you charge your customers before sales tax, but it does include charges for shipping, delivery, and installation. Like I said before, you may not deduct your costs of doing business. So, and we will talk about which deductions are available shortly. So our most common B&O tax classification is retailing. The retailing tax classification covers sales of goods and retail services sold to end consumers. For example, when the hardware store sells me a hammer or a 2x4, it is a retail sale because I am the end user of that hammer or 2x4. Generally, a retail service is a service that acts upon real or personal property. Examples of retail services include construction, landscaping and lawn maintenance, and photography. The retailing B&O tax is also due on sales of digital goods, such as movies and music, and digitally automated services, such as online multiplayer games. The wholesaling tax classification applies to sales of goods or services that are later resold without intervening use. So these are sales to resellers. For example, when MC Hammer Company sells the hammers to the hardware store, it is a wholesale sale because the hardware store then resells the hammers to its customers. Wholesalers must obtain a reseller permit from their customers in order for the sale to be considered a wholesale sale. Without a reseller permit, the sale is considered to be a retail sale. You must keep copies of reseller permits provided by your customers for 5 years. So that's another piece of documentation you'll want to keep if you're making wholesale sales. Speaking of reseller permits, here is an example of what a reseller permit looks like. Reseller permits are issued by the Department of Revenue to businesses who apply for the permit and meet the qualifying criteria. The application is free and available through our online portal, MyDOR. Reseller permits are usually valid for 4 years, but your permit may be limited to 2 years if you are a contractor or if your business has been open for less than 12 months, or if your business has not reported income in the last 12 months. If you purchase goods or services for resale, you should provide your vendor with your reseller permit so that they do not collect retail sales tax from you. You may only use your reseller permit to purchase goods or services that you resell without intervening use. Using your reseller permit to purchase other items or services could result in a penalty, so we don't want to do that. Moving on to manufacturing. Manufacturing is defined as making a new, different, or more useful product. An example of manufacturing is the making of hammers at the MC Hammer Company factory. Manufacturing B&O tax is due on the gross income from sales of the manufactured product. It is due on the products that you manufacture in Washington. Tax is also due under either the wholesaling or retailing tax classification, depending on the nature of the sale. However, a multiple activities tax credit is available to make sure that the tax is paid only once on the sale of the product by the manufacturer. So any goods that are manufactured and sold in Washington will be subject to B&O tax only once by the manufacturer. And we do have more information about that credit available on our website. The service and other activities B&O tax classification is the catch-all for any activities that are not taxable under any other tax classification. Some examples of activities taxable here include the services provided by doctors, lawyers, and beauticians. Starting in April of this year, the service and other activities B&O tax has 2 rates. And the rate you pay is based on your total income, subject to service and other activities B&O tax in the previous year. If your business or affiliate group reported more than $1 million of taxable income under the service and other activities tax classification in the previous year, then you pay at the higher rate of 1.75%. If your business or affiliate group reported less than $1 million of taxable income under the service and other activities tax classification in the previous year, then you pay at the lower rate of 1.5%. So some deductions are available, though they are not the same as income tax deductions, like I mentioned before. Some are available for B&O tax, some are available for sales tax, and some are available for both. The most often claimed deductions are listed on the slide. I will mention each one briefly, along with the documentation you should keep in order to validate the deduction should you ever be audited. So for bad debts, that deduction is available if you have reported an amount previously without receiving payment, and then later determined you were not going to receive that payment. You would need documentation to show sorry, I lost my words there for a minute. The documentation you would need would be the original sales invoice. You need to be able to show when it was originally reported on the excise tax return and when the bad debt was written off. Casual sales is a tax deduction available for B&O tax purposes. Casual sales are sales of items outside the normal course of business. For instance, I should mention that if you are making a sale of a retail, if you're making a retail sale, you do need to collect sales tax. However, you will not be required to pay B&O tax because of this deduction. So for instance, if you are a dentist and you sell the TV from your waiting room, you would collect the retail sales tax from the buyer and submit it with your excise tax return, but you would not be expected to pay B&O tax because the sale of the TV is outside your normal business activities. Interstate and foreign sales, so goods sold and delivered to customers outside of Washington, are not subject to tax in Washington. The documentation you would need would be the original sales invoice and the shipping document to show that it was delivered outside of Washington. Returns and allowances deduction is available anytime a sale is reported and then later refunded to the customer. The documentation you would need would be the original sales invoice. You need to be able to show when the sale was originally reported and the return slip or credit memo issued to your customer when you process their return. And I do want to highlight one B&O tax credit you may qualify for. The small business credit is available for B&O tax. The amount of credit is based on the total B&O tax due. And if you file your tax returns online and qualify for the credit is calculated and subtracted from the total tax due automatically. So our monthly and quarterly filers should all be reporting electronically, but anybody who reports on an annual basis, if you're not reporting online, this is a great reason to. It'll figure out your credit for you. It's fantastic. Then you don't forget. All right, so we're going to shift gears here. We were talking about B&O tax, and now we're going to talk about public utility tax. And like I said before, the public utility tax is a tax on public service businesses. And this tax is paid instead of B&O tax. So it's one or the other. Public service businesses include those who provide energy, water, and sewer services. They also include businesses who transport people and goods for hire, which I will discuss in detail here. Hauling for hire includes hauling goods as well as transporting people. And there are two classifications of transportation public utilities, and the classification you report is based on the transportation distance. Urban transportation is the hauling of goods or people where the start and end of the haul are within a city's limits, or within 5 miles of the city limits of the start or end of the haul, or are within 5 miles of the city limits of any two cities that are no more than 5 miles apart. That sounds easy, right? Well, it's a little difficult, but we have a tool for that, and I'll talk about that in a minute. These distances are not measured in road miles, but using a straight line or as the crow flies. The motor transportation classification applies to all hauls that do not qualify as urban transportation hauls. So the urban transportation tax rate is much lower than the motor transportation tax rate. So if it doesn't qualify for urban, it defaults to motor transportation. So I meant to rewrite my example for a King County example, and I forgot, and I apologize. But so I'm going to use Olympia since that's the area I know best, since that's where I live. So as an example, let's say you start your haul inside Olympia city limits. If your haul ends inside Olympia city limits, then the income would fall under urban transportation because the haul begins and ends in the same city's limits. If your haul ends inside Tumwater city limits, and that is a neighboring city, their city limits are up against each other, then the income is subject to urban transportation tax because the haul ends in the city limits of a neighboring city where the limits of both cities are within 5 miles of each other. If your haul ends in unincorporated Thurston County within 5 miles of the city limits of Olympia, then the haul would qualify for urban transportation. However, if your haul ends in Vancouver, Washington, then the haul does not qualify for urban transportation tax because it is out way more than 5 miles outside of the city limits of Olympia. Like I mentioned, we do have a lookup tool on our website to help you determine what tax classification to report for your hauls. You simply enter the origin and destination addresses, and it will provide you with a result to tell you which classification applies. And I do also want to mention that if you are doing hauling for hire and this maybe sounds like a lot of information to try to keep track of, these distances and which ones qualify for urban and which ones qualify for motor, you do not have to keep track of that. You have the option to report all of your hauls under the motor transportation tax classification. However, it is a higher rate. So if you want to take advantage of the lower urban transportation rate, then you do need to keep track and make sure that you have those origin and destination addresses so that they can be verified if you're ever audited. And but if that feels like too much to keep track of, you're not required to do it. You can always just use the motor transportation classification. All right. So let's move on to sales tax. And we're going to first talk about collecting sales tax because as businesses that are potentially making retail sales, that's something you would need to know about. So retail sales tax is paid by the customer to the seller, and the seller holds that money in trust until they file their excise tax return. At that time, the sales tax is paid to the state. The retail sales tax is collected on most sales that are subject to retailing B&O tax. The state retail sales tax rate is 6.5%. Local jurisdictions add a local sales tax to fund their local government programs, and the local rates vary from 0.5% to 4%. As a seller, you are liable for payment of the sales tax even if you failed to collect it or collect it at the wrong rate. In addition, if sales tax is collected at a higher rate than what is due, the total sales tax you collect is due to the state. So as an example, if the local sales tax rate is 8% and you collect only 6.5%, then you must still pay the total 8% to the state. If you collect 9.5% sales tax, then you must pay the entire 9.5% sales to the state. In addition to sales of tangible personal property and retail services, other purchases subject to sales tax include gym memberships, tanning and tattooing, lodging for less than 30 days, telephone service, parking, and title insurance and escrow services. So how do you know what sales tax rate to charge your customers? Well, there are 3 rules to help you figure it out. For sales of goods, the local rate is based on where the customer receives the goods. For sales of hammers at the hardware store, it's the location of the hardware store. For sales of drywall or appliances that are delivered to the customer's home, it's the location of the customer's home. For sales of labor, such as construction or maintenance, it is the location where the construction is performed or the address of the job site. For rentals of goods with a single payment, it is the location where the customer picks up the rental item. For rentals with multiple payments, the first payment is taxed at the location where the rental item is picked up, with the rest of the payments taxed at the location where the rental item is used. Since local governments rely on sales tax collections to fund their programs, it is important to collect the correct sales tax rate and report it to the right location. To assist you with this effort, we have many tools available on our website to determine correct sales tax rates. You can enter an address and find out the tax rate for that specific location. You can also use a map search or enter longitude and latitude coordinates. We offer a mobile app for businesses to find sales tax rates when they are away from their office or their computer. And our website also lists sales tax rates alphabetically by city and county, by cities grouped by county, and in Excel or QuickBooks file formats for download. And I want to give a quick plug for the mobile app. It is free to download. It is also free of advertisements, so you won't have any ads scrolling past on your app, and it uses the GPS of the mobile device to determine the location. So it'll calculate it'll tell you the sales tax rate for where that device is located, and the app keeps track of the places where you have looked up tax rates, so you don't have to write it down or keep track of it somewhere. Just when you get back to your office, you can you can export them. You can look them up and use that to help you file your excise tax return. It is a very helpful tool, and I recommend it to everyone who has retail sales in more than one location. All right, as I mentioned before, some deductions are available for B&O tax, some are available for sales tax, and some are available for both. The most often claimed retail sales tax deductions are listed on the slide. You will notice that interstate and foreign sales is listed again. This deduction is available for both B&O tax and retail sales tax for sales of goods. The rest of the deductions listed here are available for sales tax only. And again, I'll mention each one briefly and the documentation you need. I'm going to skip over interstate and foreign sales because we have already talked about that one. For retail sales tax collected by a facilitator, this deduction is used by marketplace sellers, where a marketplace facilitator collects and pays Washington sales tax on their behalf. You need to have proof the facilitator is collecting sales tax on your behalf, and usually that is in your contract with that facilitator. Marketplace facilitators are required to provide you with gross sales information for all Washington sales, so you can use that to calculate your B&O tax and any other applicable taxes. Sales to enrolled tribal members with delivery on the reservation. Sales delivered to enrolled tribal members on Indian reservations or trust lands. To enrolled members that are of that tribe are not subject to sales tax. That was a mouthful, I apologize. It is important to make sure that you are delivering the item to the reservation or trust land of the tribe your customer is a member of. For example, if your customer is a member of the Puyallup tribe, you must deliver the item to them on the Puyallup reservation or trust lands, regardless of where the customer may live. The documentation you need would be the sales invoice, a copy of the tribal membership document, and the completed tribal exemption form, which you can find on our website. Sales to U.S. government, the United States government is not required to pay sales tax. The deduction for sales to U.S. government is for sales made to the U.S. government itself. It does not include sales to government employees or other government jurisdictions such as the state of Washington or local counties or cities. The documentation you need for this deduction would be the original sales invoice and proof that payment came from the U.S. government, such as a copy of the check or credit card number. Taxable amount for tax paid at source. This deduction is if you purchase items for resale and pay sales tax to the vendor, you can claim a deduction to recover that sales tax that you did not need to pay. And the documentation you would need would be the purchase invoice. We have discussed when you need to collect retail sales tax, but what about when you need to pay retail sales tax? You need to pay sales tax on all products and retail services you consume. You are considered the consumer of any item or retail service you use up while operating your business that you do not incorporate into another good you sell. You may not use your reseller permit to purchase these items because you are not reselling them. For instance, cleaning supplies are not items you resell unless you operate a janitorial supply company. We're going to assume you do not operate a janitorial supply company for this example. So assuming you do not resell cleaning supplies, you must pay sales tax when you purchase them. So what happens if you didn't pay sales tax on an item or retail service you used? Well, use tax is a companion to retail sales tax. Use tax is due when retail sales tax should have been paid but wasn't. For instance, when you purchase items online from out-of-state vendors who do not charge retail sales tax, then use tax is due when that item is used in Washington. Use tax is reported on your excise tax return. The tax rate is the same as the retail sales tax rate for the location where the item is used, and you can use our tax rate lookup tool on our website to find out the appropriate tax rate to report. The amount subject to use tax is the total purchase price of the item, including any charges for delivery or installation. So some examples of things you might report use tax on would include items purchased outside Washington, such as in Oregon, and brought back to Washington, and digital goods and services. You must pay either retail sales tax or use tax on all assets not used in manufacturing and consumable supplies such as office supplies. But I want to make sure we're clear. You pay one or the other, either retail sales tax or use tax, but don't pay both. You don't owe both. Real briefly, litter tax is imposed on those industries whose products are reasonably related to the litter litter problem. Sorry, wrong word there. The litter tax applies to sales made within this state, and it is due in addition to any other taxes. Litter tax is not collected from the buyer, but is paid by the business. The litter tax is deposited into the Waste Reduction, Recycling, and Litter Control account and used by the Department of Ecology for highway cleanup programs. Litter tax is paid by manufacturers, wholesalers, and retailers of 13 categories of products. Some of the categories were combined in the list shown here so that they would fit on the slide. So the 13 categories include food for human or pet consumption, groceries, cigarettes and tobacco products, soft drinks and carbonated beverages, beer and other malt beverages, wine, newspapers and magazines, household paper and paper products, glass containers, metal containers, plastic or fiber containers, cleaning agents and toiletries, and non-drug drugstore sundry items. And an example of that would be diapers. So when do you need to file? Well, you need to file either monthly, quarterly, or annually. This frequency is assigned to you when you register your business with the Department of Revenue. Your filing frequency is determined by the amount of tax you pay, or if you haven't filed any returns yet, it is based on the amount we estimate you will be required to pay. And that estimate is based on what you put on your business license application. You can find out what your filing frequency is in a few ways. When you registered your business, you should have received a welcome letter from the Department of Revenue, and your filing frequency is listed on that letter. If you no longer have that letter, you can check your account online in My DOR to see when your next tax return is due, or you can always call our telephone information center, and one of our agents will be happy to assist you. On the slide, you can see when tax returns are usually due. For monthly filers, it would be the 25th day of the following month. The March return is due April 25th. For quarterly filers, it would be the last day of the month following the end of the quarter. So the Q1 return for January through March is due April 30th. And new this year, annual returns are due on April 15th of the following year. If the due date falls on a weekend or state holiday, then the due date is moved to the next business day. And I want to take a minute right now to talk about how some due dates are changing because of COVID. So we do have a yellow banner on the top of our website that has a link to our resources available for COVID relief. And one of those is one of the things listed on that page are due date extensions, interest and penalty extensions. And so if you are concerned about how you're going to get your tax return filed or how you're going to pay the taxes due on that return, please, please, please check that website. Also, if you aren't quite sure or you need an extension, please call our telephone information center and they will assist you. They will help you out in however they in all the ways that they can. So, and that information is changing rapidly. You know, as proclamations get extended and things change, we do update that page often. So I do encourage you to check it out. All right, electronic filing is now required for monthly and quarterly filers with limited exceptions. I did mention that earlier. I highly recommend it for annual filers as well. The MyDOR system is customizable for your business activity and calculates the taxes due, including some credits available, like I mentioned before. And you do have several payment options through e-file, including electronic funds transfer directly from your bank to our bank, and payment by credit card, which includes a small fee in addition to the taxes due, and that is charged by the credit card processor, not by the department. I do want to highlight that on your account page is an action items tab that includes all of the various tasks you might need to complete for your accounts. If we send you letters or messages, they will be listed on that tab, and we do send you some important information. So please do check those to make sure that you're staying informed. And we have more information about My DOR, including step-by-step instructions, on our website. So an excise tax audit is a routine procedure to verify that you have filed your tax returns correctly. Being selected for an audit does not mean you have done anything wrong. Like I said, it is routine. Auditors will review your business records to verify that the total, that the total taxable income has been reported and that it has been reported under the correct tax classifications. They will verify that sales or use tax has been paid on purchases where appropriate. And they will also review deductions or credits claimed, and they'll look and see if there are any deductions or credits that you qualify for that you forgot to claim or didn't know about. So speaking from experience, auditors love to tell you that you get money back. It is our favorite time. And so the audit review covers a period of up to 5 years. And so that's why we say keep your records for 5 years. The goal of the audit is to correct any reporting errors and provide guidance to report taxes properly in the future. So if you are selected for audit, that auditor is just trying to help you make sure that you're doing it right. And they come in expecting that you've done it right, and they're just there to make sure, to make everybody feel comfortable that it's been done right. So as I mentioned at the beginning, we're going to talk real briefly about personal property tax. This tax is similar to real property tax, except that the tax is due on tangible property rather than real property. The primary characteristic of personal property is its mobility. It can include machinery, equipment, supplies, and furniture. It does not include inventory held for sale. Only business property is subject to personal property tax. So items you own as an individual separate from your business are exempt. Personal property tax is administered by your county assessor. The Department of Revenue oversees the personal property tax program statewide to make sure that the tax is applied consistently from county to county. You must provide a list to your county assessor of all of the business property you owned as of January 1st of each year. The list is due to the county assessor by April 30th. The list includes the date of purchase, the purchase price, and the type of property. The assessor then goes through that list and assigns a taxable value for each item based on current market value. And property tax is due on the total taxable value of the business property at the same rate as real property tax. Tax is due the following year with half due April 30th and the other half due October 31st. So just like real property tax. And then one more thing I want to highlight here is unclaimed property. Every state in the US has an unclaimed property program aimed at connecting people with money they have forgotten about. Unclaimed property is money or tangible property owed to an individual or business. Property is considered unclaimed after it is held for a period of time with no contact with the owner of that property. Abandoned property is turned over to the Department of Revenue, and we return it to its owner. The most common forms of unclaimed property you might hold for others would be uncashed payroll checks or deposits. You are required to file an unclaimed property report with the Department of Revenue by October 31st of each year. Even if you don't hold any unclaimed property, you would report a negative or no property report. Our website provides additional information and a search feature so you can find out if you have any unclaimed property held by the state. If you do, the claims process is quite easy and you can expect to receive your property in 2 months. And as I mentioned, we do have a lot of information available on our website to help you file your taxes correctly every time. We have guides for common industries and easy to understand articles on a variety of tax topics. If you're still unsure, you can submit requests for specialized assistance. Binding tax rulings provide answers to your questions that are binding on both you and the department as long as the facts and the law remain the same. If you have multiple questions, you may benefit from the free tax consultation consultation service offered by the department. To get started, you submit a questionnaire and then a tax consultant meets with you to learn about your business. They will provide you with written instructions so you know how to report your income going forward. And you may also request a speaker to come talk to your group about tax topics like we are doing today. This service is also free, though subject to the availability of our experts. And here, if you are not able to find answers to your questions on our website, you can call our telephone information center or send us a chat message. We have agents available to answer your calls and chats between 8 a.m. and 5 p.m. Monday through Friday. I do want to mention that if you have questions about confidential information, that you would need to call us because we do not have a way to verify your identity through the chat feature at this time. So if you have a confidential business question, you would need to call us. But general tax questions are just as easy to answer through chat as over the phone, whatever's most comfortable for you. And here I have also provided my contact information. Should you have questions about excise tax reporting in the future, I am happy to help as well. And so that brings us to the end of my planned discussion. I want to thank everyone for joining us here today. It was a pleasure to connect with you. And so let's see what kind of questions we have.
Thank you so much, Quinn. This has been really informational. I've gotten a couple emails and texts saying this is really helpful. Just want to
Oh, good.
we will have the recording and a copy of the presentation emailed to everybody that registered in the next couple of business days. So you'll be able to get this information as well. I went ahead and listed the website for the unclaimed property in the chat. So the website is there, super easy. I check that every year around the same time I do my taxes. Put in your name, and you should see probably a lot of similar names, to just match it by your address. That's usually what helps you find it. And with that, I'll hand it back to Quinn to answer some of the questions. It looks like we have 8 in the Q&A. Some of them were covered during your presentation, but I'll let you just go over them briefly as you go through there.
All right, thank you.
And I'm happy to read them, Quinn, if that makes it a little easier for you to answer.
Yeah.
Sure, yes. Actually, I would prefer that.
All right, we'll do that. And then if anyone is holding on to questions that they want to ask live, once we are done with the questions in the Q&A box, we can just do a check for anyone who needs to raise their hand. And you can raise your hand to ask your question as well, but we'll go through the 8 or so questions that are currently in the Q&A box. So first one is...
We have to share to raise your hand. If you're not super familiar, click on the participants tab next to the Q&A. And once the box opens up, you should see a raise hand button on the lower right of the box. Again, it's under the participants if you'd like to ask a live question after we go through the Q&A. Sorry to cut you there.
Yeah, no, that's good. Thanks for giving the instructions. So the first question is, when does the new 1.75 B&O service rate start?
Okay, so that rate began April 1st of 2020. So starting with the April return or the Q2 return, there are two tax rates for service and other activities. And like I mentioned, the rate you pay is based on your previous year's taxable income under service and other activities B&O tax. So that'll be your rate for the entire year, and then the next year you take a look at the previous years and see if it's changed.
All right, great, thank you. The next question is, I have a business where I provide website development and consulting services. I help people with their websites. It seems this may qualify as retail B&O and service and other activities B&O, right?
So I'm guessing that, well, I mean, there might be a retail aspect to it, but probably your consulting and website development is going to be service. I'm trying to think of a time when it might be retail, and it's just not coming to mind. That doesn't mean that's not true, but it's not real common. So, but if you want to get a specific, provide some more details and get a specific answer, if there's, if you think there might be some differences in the way you do things, please do submit a request for a binding ruling, and we can get you an answer usually within 10 business days.
Awesome. Thanks. The next question is interstate consulting. If you are a business consultant working with someone in another state, is that qualified for an out-of-state credit, or do you pay because you live in Washington?
Oh, that's a really great question, and I'm glad that they asked it. So, income that is subject to tax under the service and other activities tax classification is apportionable, which means that if you have some income that is oh my gosh, the word just ran out of my head, but if you have some income from out-of-state clients, then it is possible that you can that you would report just a portion of your income, that you wouldn't that you might not include all of it. And so we do have a guide on our website under the education tab. We have industry guides, and there is a guide about apportionment. And so if that is something that applies to you, I do suggest that you go take a look at it. In fact, you know what, I'm going to show where that is. Since I'm sharing my screen, I can do
Awesome.
that.
That's great.
Hold on, let me get there.
And we can share links on the chat as well.
Sure.
Yeah, no, that'll be really helpful to see where that is.
So let me zoom in real fast because uh-oh. Oh no.
Of course.
Now of course. Okay, anyway.
The whole state website has gone down. Oh.
Oh no.
Oh no. All right. Well,
Um,
maybe if it comes back up by the time we end, but that is,
yes.
and then maybe if Hugo, if you're able to look for the link. Oh, I have some background noise, so let me see if that keeps going. Anyways, let's move on to the next question.
What we'll do is we'll ask Quinn if he could share the links afterwards, and
Yeah.
we'll send the links out with our follow-up email, which will include the presentation and the link to the recording.
Yes. I would be happy to do that.
Right.
Like I said, it's on the education tab, industry guides. There's information there about apportionment. And so there are a lot of factors involved. And so it's a really hard question to answer without a lot of information specific to each business. But it is explained quite well in that guide. And so hopefully that will give you the answer you need.
Okay, awesome. The next question is for rental income and real estate surveying consulting income. What all types of taxes apply to these incomes? And does that change if I'm a sole proprietor under my name versus an LLC?
Okay, Shannon,
I'll
can
read
you
it
say again? Yes, thank you.
I will. For rental income and real estate surveying / consulting income, what are all of the types of taxes that apply?
Sure.
And does that change if they're a sole proprietor versus an LLC?
Okay, so I'm going to answer the second question first, and it does not matter how your business is structured. If you are a sole proprietor or an LLC, the tax is the same. So for rental income, I am assuming that is rentals of real estate, so rentals of homes or apartments for more than 30 days. And if that is the case, then that income is exempt from B&O tax. So no B&O tax, no sales tax. If it is a short-term rental, so less than 30 days, so like an Airbnb type of situation, then that would be a retail sale with retail sales tax. And if you are doing a rental through a facilitator such as Airbnb or VRBO or any of the other many options out there, then you would want to work with that third-party provider to see who's collecting the tax and who's responsible for submitting it with the excise tax return. For real estate surveying and consulting, that sounds like not interacting with or changing the real property. And so I would guess that those activities would be subject to service and other activities B&O tax. No retail sales tax would be due on that. Just based on what I've seen before, surveying and consulting related to real estate is usually a service activity. So.
All right, thank you. The next question is, should we keep all records for 5 years?
Yes, definitely. um, Especially if it has anything to do with your excise taxes. I can't speak to what other agencies would require, but anything related to your excise taxes do keep for 5 years. And like I said, that can be in paper form or that can be electronic. If you do keep an electronic version, I do highly recommend that you have a backup somewhere because recreating crashed or deleted files 5 years later is tough. So it's in the event of an audit, it's always good to have a backup. But yes, definitely 5 years. Keep all of your records.
All right, thank you. The next one is, are there related fines during an audit if issues are found?
Okay, so there are potential penalties in an audit. So the first one that I'll talk about is the I think it's called the substantial underpayment penalty, or assessment penalty for substantial underpayment. Anyway, I don't remember exactly what it's called, but that is a 5% penalty that is due if what you have paid on your excise tax return is less than 80%, I believe, of what your total taxes should have been paid. So, so if you're pretty close, then there's no penalty. But if you're more than 20% off, I do believe that is the percentage. It's been a while since I've audited, but I'm pretty sure it's 20%. If you're more than 20% off of what you should have paid, then there is a 5% penalty. There is also a potential for a late return penalty. So if the auditor determines that you have not filed your tax returns, maybe you didn't file any for a year, but you should have, and it's now 2 years later, those are all now late tax returns, right? So uh, there would potentially be a late payment penalty for those, or late filing penalty. And that can go up to 29%. So I really do encourage you to report your taxes on time. And if you can't, to give us a call as soon as you know that you're not going to be able to do it, so that we can work with you. It's easier if you call us before the due date. And then other penalties potential on an audit would be a misuse of resale certificate. Oh my goodness sakes. Those haven't been around for 10 years. I apologize. Reseller permit. If you misuse your reseller permit, you could have a 50% penalty of the tax that should have been paid. And so that's a pretty hefty penalty. So do be careful when you're using your reseller permit to only use it for purchases of things that you're going to resell. And then the last one that I can think of that might be applied in an audit, which very rarely is applied, is a fraud penalty or an evasion penalty. So, and that's when businesses are not filing their taxes on purpose. I mean, those don't happen very often, and thank goodness, because I don't think I would have. I mean, no auditor likes to assess penalties. Um, so those do get assessed very rarely, but that is a possibility. So I want to make sure I'm thorough there. But as long as you're trying to report your taxes properly, and we assume you are, then that penalty is unlikely to apply to you.
All right, thanks. The next question is, can you offer any advice on city B&O taxes? We're consulting engineers and do business with clients in multiple cities outside of where our office is located, and some of those also have a B&O tax.
I am not able to speak to the various city B&O taxes. Yeah, unfortunately, at this point, you would just need to contact each of those cities individually to find out what their requirements are. We do offer the ability to register with most cities. Yeah, most cities. Over 100 cities have partners with us for city endorsements on your business business license. But as far as reporting B&O tax, that is a local question. So you would need to contact those cities and talk to them about their B&O tax.
I'll go ahead and put my email in the chat. If some of you want to get connected or find out who the economic development managers for the cities you're interested in, please send me an email and I'll try to connect you with each city as needed.
Excellent.
Great, thank you. All right, and the next question is, I'm a volunteer for a small nonprofit and I do the books. We collect fees for regattas and other expenses. The money flows in and goes directly out. Also, we have fundraisers to pay for expenses too. Are there any exceptions for nonprofits? Some months we have a lot of money that comes in and goes directly out. So how do we pay B&O if little money is retained in the bank?
Oh, that's a good question. So for nonprofits, most nonprofits are subject to tax, just like a business would be. So however, there are fundraising exemptions for, so like a once a year fundraiser that would be exempt from B&O tax. But if you had, for instance, like a gift shop for your nonprofit, and you made regular retail sales, like every day or every week, or you had it open on a regular basis, then that would be taxable. So for your fundraisers for your rowing club or sailing club, you mentioned regatta, so I don't remember what kind of boat, but for your uh, fundraisers for those, I assume that they are infrequent and not regular and recurring. So those are likely to be exempt. And the registration fees for regattas, that I would have to do some research on that. I don't remember exactly how those work, and it might depend on the age of the participants. Sometimes youth events are taxed differently. So I apologize that I don't quite remember how those fees work for events like that. But maybe we can um, connect with you afterwards and get you an answer. So
Okay.
sorry.
Yeah, thanks. No, it's a complicated question. Yeah, so
Yeah.
I appreciate that. Some of these are kind of hard to do off the cuff for sure. There's a comment. Thank you for the helpful and informative presentation. So just some gratitude there. And then the next question is, please, are LLCs classified as an S Corp focused on real estate transactions required to file quarterly taxes?
Oh, that sounds like a federal income tax question. But if it is a state excise tax question, if your business is registered and has a quarterly filing frequency with the state, then you would report quarterly. And if you aren't sure, you can go online to check your account, or you can call our information center, our telephone information center, and ask them to help.
And apologies if you mentioned this earlier, but how is it determined whether you pay monthly, quarterly, or annually?
Yes, so that is based on the amount of tax that you owe. So, and if it's a new business, we estimate it based on what business activity you're planning to do and what you estimate your annual income to be. Those are two questions that get answered on the business license application that help us guess as to how much tax you might owe. And so it looks at the total tax that we expect that you would pay, including B&O tax and sales tax. And so if we anticipate that you will owe a lot of tax, then you would be reporting on a monthly basis. And if we anticipate you would owe a medium amount of tax over the year, then you would be on a quarterly basis. And if we anticipate that you would have a low tax liability, then you would probably be put on an annual filing frequency, unless there are some industries that report more frequently regardless of their of
Receipts,
their
the revenue.
tax liability because
Okay.
of the tax classification that applies to them. So, but
Okay.
yeah, it's based on total tax liability.
Great. Thank you. That's helpful. And the next question is, are there resources to learn about apportionment?
Yes. So, like I said, we do have that guide on our website. And if, you know, we have had that question more than once. And so I'm going to bring that up to my team and see if we can see what more we might be able to put together for folks, because it is a little it's a little overwhelming, and there are a lot of different little pieces. So if anybody has any specific questions related to apportionment that they're looking for that aren't getting answered, then please let us know so that we can get that information out.
Great. Thank you.
Um,
I think I might have found the link. Um, oh, I think that's a very specific. Anyways, we'll look for links to send out again with the rest of the materials. The next question is, do we still pay B&O tax if we make less than a certain amount per year?
okay, so the B&O tax, well, this sounds like a registration question. And but if you are already registered and you have a certain tax liability, B&O tax liability, then there is a small business credit available for low tax liabilities for small business. And so more information is available for that on our website. There are tables to help you figure out what amount of credit might be available to you. If you are not registered yet, and you make less than $12,000 a year and you don't need to collect sales tax, and you don't need to collect any other taxes or fees or pay any other taxes or fees to the department, you might not need to register. So we do have some more information about our registration requirements on our website. So again, no, if you don't need to collect sales tax and you make less than $12,000 a year, you likely don't need to register. But if you are registered and your income and your B&O tax liability is small, then you would probably qualify for the small business credit. And if you file online, it will figure that out for you. If you file on paper, then you would need to fill that out on the return. I hope I answered
All
that
right.
question.
Yeah. All right. Thanks. And then the last one that we have in the box is someone wondering how an auditor would discover improper use of a reseller permit.
Okay. So what it would probably look like is that you are not, if you have a reseller permit and you are buying a lot of things without paying sales tax, and things that you are using. So what this might look like is, I'm trying to think of an example of something where maybe you resell, like maybe you have like a gift shop and you resell like knickknacks and stationery and greeting cards or that kind of thing, but you use your reseller permit to buy all the building materials for your house. That would be a misuse of reseller permit. So that would not be okay. But if you're using your reseller permit to buy the things that you're reselling in your gift shop, that's totally fine. Or maybe you're using your reseller permit to buy all of your computer equipment that you use in your business. Those are assets that you need to pay tax on. And so if you're using your reseller permit for that, that is not what it's for. And so that could be a misuse of reseller permit. So I mean, what it would look like for an auditor is just looking through your purchases to see what you pay tax on, what you don't pay tax on, and then going from there.
Great, thank you. Sorry, I have a bit of background noise, but appreciate that, I think this is we've answered all the questions that came through the Q&A box. If any attendees have any additional questions, please feel free to raise your hand. And I'll just take a moment to let you guys know that we have a new program. Well, there's a program that Communities Rise, a local nonprofit, has been offering to small businesses during the COVID-19 pandemic. And it is a program where you can get a free one-time legal consult on one particular topic affecting your business related to COVID-19. So that might be a lease renegotiation, an employment law question, a financial question, a business structure question, and you are able to take one topic to their program and get an attorney who will be able to advise you on that issue. So I'm putting a link in the chat that you can click on to learn more about this program if you do have a legal question that you're grappling with here at the end of the year about COVID-19. And King County is supporting this program, so we want to make sure that our small businesses who may be able to take advantage of it know about it. So do take a look at that if you do have any questions that you think would benefit from legal advice. And I'm going to mute myself just as we close out. Hugo, would you mind closing us out? I don't see anyone raising their hand.
Yeah, no, happy to. Thanks for sharing that great resource. Super critical. I know that there's a lot of moving parts with everything that's happening with COVID response. Again, the link is to Communities Rise, which is a nonprofit organization that helps provide legal support services to small businesses. We will, as mentioned in the chat, we will be emailing you all a copy of the presentation as well as a link to the recording of this presentation so you can follow up separately. And with that, it looks like we don't have any more questions in the chat. So with that, we'll go ahead and end and give folks 10 minutes. I wanted to go ahead and say thank you so much to all you business entrepreneurs, business owners, colleagues here from other jurisdictions. We know these are really challenging times, so staying informed is critical. We hope to continue to share information as fast as possible. Thank you, Quinn, and thanks everybody.
Thank you.
Thanks for joining us.